This is where you can see different pairs. You can also check the charts here to see how your favorite pair is doing. Yes, this is the charts. And also, there are several futures. You can select the currency you want. And here you can set your alerts. You can set alerts. I feel that's the most important ones. Those ones I just said. So this is the favorite. This is the sports. Yeah, favorite. You put your favorite pairs here. Yeah, this is the sports. This is the futures. These are the pairs available for sports. This is pairs available for future. Now, what is sports? Now, sports allows you to just swap. It allows you to just swap, buy and sell your coin immediately. Just buy and sell. This is where it happens under trade. So under trade, this is sports. This is how simple it is. If you come here, let's say you want to buy Ethereum, you put ETH. You use the pair. This is USDT. You select it. Then you come here. Now this is buy. This is sell. This is buy. This is sell. This is markets. I prefer using markets. Although some people use limit, but me for sports, I prefer using markets. So it will be executed fast. If you use limit, it might take time. But if you use market, it will be very fast. Now if you come here now, you input how much worth of Ethereum, 50. This is the amount 50 can buy, $50 can buy you. Then you select buy and it buys automatically. But this is not our business today. We are talking of futures. Now this what I'll be explaining here is very critical. So make sure you're with your jotter. Make sure you're jotting things down. So if you go to the futures now, this is futures. If you come here now, there are different icons, different futures you'll see here. Now number one, this is the pair futures. This is the pair aspect here. Now here, this place allows you to select the pair you want to trade. Let's say you want to trade BAT. You select here, you tap here, and select and tap search for the pair you want to trade. This is USDT against USDT. You tap. Now this place is where you change. This place is where you select the pair, your favorite pair. While here we have cross. So let me skip this first. Okay, here we have cross. The next thing under it is cross. The next thing under it is cross. Here under this BAT USDT we have cross. I don't know if you can see it. Cross. Now if you select the drop down arrow now, you see that there are two options, cross and isolated. Now these two options now, it is very critical that you know what they do because they are completely different. Any slight mistake can cause serious harm to your money and your trading account. Now first of all, write this down. This is very important. Cross. Now cross margin. This here is the margin mode. The first one is cross. Now cross margin now allows you to trade. Yes, but something critical about it is that in cross margin, you are not just trading with your capital. It's as if you are trading with your whole account. Now this is risky because in cross now, you can be in loss, and instead of the trade to close, it will keep deducting from your balance. That is the balance you did not trade with, just so it can keep filling the order, so you don't get stopped out. Let me repeat it again. With cross margin, if you enter a trade and the trade is going on loss, instead of the trade to just hit stop loss and end, it will be deducting from your balance, from your account balance, to fill the trade. You understand? To fill the position so it doesn't close. This is one disadvantage of cross. You must have heard in situations where somebody will tell you that they got liquidation and everything in their accounts disappeared. It's as a result of cross. Yes, this is what cross can do. It's very, very risky. Honestly, I don't advise anybody to trade using cross margin mode. Instead, you use isolated. Isolated is better. With isolated, if you enter a trade, it's $10. That trade is going to close immediately you hit stop loss. You understand? Nothing else will be deducted. $10 is what you'll be trading with. Nothing more, nothing less. So let me come again. With isolated, write this down. If you enter a trade with a particular capital and that trade hits stop loss, you will not be losing more than that. You understand? In isolated, money is not deducted from your remaining balance to keep you in the position. You dig? But with cross, money is being deducted. Now with cross now, you stand a chance of being liquidated and losing everything in your balance if the trade goes against you. But with isolated, that cannot happen because isolated keeps you safe. So I advise everybody here to use only isolated to be on the safe side. That is what I use. So now next thing here is our leverage. So now, like I said, this leverage is depending on the pair. You can have as much leverage as you want. Some pairs allows you to use up to 100, while some doesn't. You can always adjust your leverage. You can always adjust your leverage to how much you want to sustain, whatever leverage you want. I already explained what leverage does to your capital, your profit and your loss. So this is where you can adjust your leverage. Here, this place you see 15x. That is where you can adjust your leverage. So now here, this place where you see red and green, this is These are the asking price, selling price, and buying price. This is where you see live orders. These are orders that are live, that are yet to be filled. This aspect is not necessary. Now here now is the current price of the token. If I should go for BTC, what you see here is the price of BTC. So that is it. So now if you are going long, that is you are buying, you select here. If you are shorting, if you want to sell, you switch, buy, sell, buy, sell. Don't misplace it. Buy, sell, buy. Now another thing you need to take note of is this place. Now we have limits, post only, market, stop limit. As a trader, I would advise you to use limits. Some people make use of stop limits, some people make use of market, but I would advise you to use limits. Limits is very helpful. So with limits here, this is where you input the price you want to trade. You understand? If you're a technical analyst, in your analysis, I'm sure you already have a price you intend to trade. This is where you input the price you get. Now this is where you input the amount. Okay, now let me do a live example. Let me do an example now. Come here. Now, let's say you got a signal, or maybe you analyzed from your chart and you got an entry to trade BTC, to short BTC from 24,000. Now from this, our entry is 24,000. Our target, that is take profits, is we have 3, 1, 2, 3, and we have SL. So now what you do is, you come to your Binance, you come here, you input 24,000. That is the price you want to short from. Then let's say you want to enter the trade with just $15 of your account, and your profit is, and the take profit you want to use is 20. Let's use the first one, 23,625. You come here, this here, TPSL. I would advise you to always use your take profit and stop loss, so you don't lose money to the market anyhow. You use 23625, and your stop loss from here we have 24307, 24307. Then you sell. You understand? I don't have any at the moment. I don't have USDT at the moment. So once you tap sell, automatically the position will be opened. You see it under orders. Once price goes to 24, your trade automatically will be triggered and it will be found under position. These orders are for positions that are not opened yet, are for trades that are yet to be triggered. White position is where you see trades that are running. You understand? So that's it for that. And if you want to buy, you follow the same process. If you are buying, you input the price, put your take profits and stop loss. Honestly, if you understand, once you understand this, how to use this platform, you will not have much problems. The next thing here is position sizing. Position sizing. So first of all, what is position sizing? Now, position sizing determines how much of your money, how much of your account goes into a trade as the capital for that trade. Write this down. Position sizing determines how much of your funds, how much of your money goes into a trade as the capital for that trade. Now, determination of position sizing is important for crypto trading as it helps for the proper trading plan and risk management. Now, with position sizing, it can help you preserve your capital and it can also help you manage risk. That is the number one. That is an advantage of position sizing. Position sizing is very, very essential, very important for future traders. Yes, it's very, very important. So let's go straight to the point. Now, for position sizing, now we have a formula. Honestly, I enjoy the mathematical aspect of this class even more. So that is where we're about to go into. Let me go to my notes. Position sizing. Position sizing. So here, I'll be showing you guys how to. Now, the formula for position sizing is PS, which is position sizing equals to risk amount over risk amount divided by, where is my divide? Risk amount divided by SL size. Now, this is the formula for position sizing. Risk amount divided by stop loss size. Now, where risk amount equals to the amount you are willing to risk for that trade. Most people that trade futures, they don't enter a trade depending. They don't enter a trade based on their. They don't just go ahead to pick capital they want for that trade. Instead, they use position sizing because it helps them preserve their capital. It helps them. Now, secondly, SL size stands for your stop loss percentage. Your stop loss percentage. If you are a tech analyst, you will see this on your chart. We'll get to that soon. So this is the formula for position sizing. So let me go straight up. Let's say you are a technical analyst. Let's say you're a technical analyst. You finish analyzing this pair BTC against USDT, and you got something like this. Now for this trade now, your your risk amount is the amount you want to risk. Now let's calculate your risk amount. Let's say for the trade, you want to risk just $10 for that particular trade. For you to want to risk $3, I'm assuming your account is a $200 account or 100 or 150 thereabout. You want to risk $10 for 100. Now this is $10 divided by, let me put the units, divided by SL percentage. Now how do you get your SL percentage? As a technical analyst, I keep making this mistake. As a technical analyst, your SL percentage is here. Let me mark it out for you. Where is my, this is your undo. Let me mark it out. Now this here, this right here, you see that 0.33%? That is your SL, what is it called? That is your SL percentage. So you do $10 over 0.33%. Believe me, this is very easy. So PS equals to $10. Let's use the calculator. $10 divided by 0.33%. You have 3. Copy this. Paste. The zeros. Let's just leave it here. Now we have this as a position size. Remember, this is for BTC. Yeah. So let's go. So after getting this your position size, now what do? Remember, position size is what will decide how much of your capital will be traded with. The only thing you know here is that the money you are risking, guys, if this trade through. So like I said before, this position sizing now, in this calculation, you only know that you are willing to risk $10 if the price should hit stop loss, but you don't know how much will be going into the trade yet. So what you do is you copy this position size you've gotten, you copy it, you come to Binance. Remember, this is for BTC. If you come to Binance, you come here. Now we have, this is BTC, this is USDT, and remember that was a short trade. This is a short, that is we are selling. So if you come here, first of all, you switch to sell, select. Now something good about this, for BTC you have leverage up to 125x. Now one good thing about this is that regardless of the leverage you use, if this trade should hit SL, you are only losing that $10 you used. So let's input it 3030.30 USDT. Your position size, the amount you got, you input it under USDT. From our calculations, we got 3030.3. So please don't after putting it, don't touch this lever, this place I'm touching. After inputting it, please don't touch it. So avoid issues. 3030.3. See, if you come here now, if you can see where I'm showing you, right here, you see the cost. Now this trade cost us 24.09 USDT. 24.09, that is the cost of this trade, that is the capital. You understand? If you should hit SL, you are losing $10. We are using 125 leverage. You tap sell shots. After inputting it, you tap sell shots, and the trade will be triggered once the price hits. I don't know if you understood me. Let me do one more example. Now let me come back here. Let me use another pair. Okay. Now let's assume now you finish analyzing and you got something like this. And you got an analysis like this. You got something like this after your analysis. So How do you calculate your position size? Let me start from beginning. Now this calculation is for, now remember the formula. Position size equals to, the formula we have the position size equals to risk amount over SL size. Now for this trade now, you want to risk, let's say you have a small account, all you want to risk is just $5 over, what is your SL size? Our SL size, like I said before, is the percentage, SL percentage here, which is 0.0, which is 0.4 from here, 0.40%. So let's input it, 0.4%. Let's calculate it. So it's my calculator. $5 divided by 0.4%. 5 divided by 0.4%. That is 1,250. 1,250. So now, this is our position size. This position size will determine how much of our account balance will go into this trade. It will determine the capital that will be used for this trade. So let's come to Binance. Remember, the pair we analyze is 1, ONE, 1. Yes, sir. So here, you pick, remember, okay, the maximum leverage for this pair is 20x. Remember what I said? You can use as much leverage as you want, but if you get stopped, you'll be losing just the risk amount, which is how much? $5 for this trade. Remember that. So let's use 15. Oh, this one is hit. Let's use 15. 1, 5. Let's use 15x. Our position size is 1,250. You come here. Remember, we are long, you know. Don't forget. Okay, yes. From here, remember, it's long. We are buying. You switch here. Remember that. So you leave one. You come to USDT. You write 1,250. Done. You see, from this now, our money that will be going in is $83. 83 USDT. I know you must be asking, why is the money much here when BTC is even more expensive than this pair? The reason for that is that the leverage we are using here is 15x. Please bear that in mind. This might be a little bit complicated, but I want you to understand. The leverage here is 15x. The one we use for BTC is 125x. You get? That is why BTC was just 24. Meanwhile, this one is 83 USDT. So in situations like this, if you don't want it to extend, what you just do is you reduce your risk amount. That is what you do. So after doing that, you don't tap this lever here. You just tap buy long, and automatically to buy. So now, this case scenario now is strictly for those that are no technical analysis. Now, what about those that get their signal from signal groups and the likes? Now, there is a completely different calculation for that. Now, for those that get their signals from signal groups, one problem they're having is that they don't know the SL percentage, because the person is just sending numbers. He's not sending details like that. You get? So for that, you have to calculate our SL percentage. Now, position size equals to risk amount. Position size equals to risk amount over SL size. Now, let's say for the trade we want to risk $20 over SL size. What is our SL size? We don't know what the SL size is because we don't have access to the charts. You get? So what do? We find SL size. Now, to get SL size, the formula for getting SL size is entry price, open brackets, entry price minus SL price divided by entry price times 100 since it's percentage. Writing it down self will be more understandable. This is, I'm typing, that's why it looks, I don't know how I can type it that it will be more easier. But if you write it down, it will be more easier for you to understand. But let me just go ahead to solve it so you get me. Entry price minus SL price. What you get, you divide it by your entry price. Then your answer, you multiply it by 100. Now, let me go straight to the point. Now, which one will I use now? because when we are done with this, come here. Now let me use this. You got a signal like this now, and you want to calculate position size. Now the formula says entry price minus SL price. What is our entry price? From here we have 1890 as our entry price. You write it 1890 minus what is our SL price? 1855. Don't be deceived. Don't allow this thing discourage you. Futures trading is not that hard, but these little things are just necessary so you don't lose much. You understand? As time goes on, you become used to it. Now, 1890 minus 1855 is 45. Sorry, 35. 1890 minus 1855 is 35. Now, this amount you get, you divide it by your entry price, which is 1890. Now, 35 divided by 1890. 35 divided by 1890 equals to 0.185. 0.185. That is what we got. So now this is our answer. Now what do we do now? We multiply it by 100 to get the percentage. We multiply it by 100. So now what do we have? 1.85. So from this our SL size, okay, what do we have? 1.85%. So from this calculation, our SL size equals to 1.85%. So let's go back to calculating our position size. So you see, now this is why you need to learn technical analysis. Imagine you going through all this stress just because you want to enter one trade you got from a signal. So I advise everybody here, learn technical analysis. If you see a future for yourself in trading, if you believe you can get a full-time career from trading, make sure you learn technical analysis. Almost everybody now is learning digital skill, and the number one I would advise anybody to learn is technical analysis. So if you become good at it, believe me, you make, like, with time, if you remain consistent, with time you'll be made. You'll be a millionaire. All these things you see influencers say online, all these results you see them posting, don't just assume that it's fake. It's 100% true. They put in the work. So let's continue. 1.85. So just try much as possible to make sure you learn technical analysis. 1.85. So now, remember, all those calculations we're doing is just get our SL size. We have not gotten our position size yet. So now to get our position size now, we do 20 divided by 1.85%. 20 divided by 1.85%. 1081. 1081. Remember, this is our position size. So which pair is this? I didn't even put the pair. Which pair is this? BAT USDT. BAT USDT. BAT USDT. So let's come back to our Binance. Look for BAT USDT pair. BAT. This is it. So here, let's say, okay, we have leverage up to 20x. Let's use 20s. From the signal here, it says long, which is to buy. You come here, you select buy. You selected your leverage. Make sure this is on your margin is on isolated margin. Make sure to avoid story. Now you come here now. Under amount, USDT amount, you put 1081. This is the position size we got from our calculation. You input it here under USDT. So we'll be using $54 to enter this trade. Remember, the amount we are risking is $20. That is, if the price we hit SL, we are not losing everything. We are losing only $20 of the amount we traded with. Take note. That is one good thing about trading. Trading is not gambling. It's just like prediction. So if it doesn't go your way, you're only losing some amount of what you entered of your capital. So after inputting that, you select buy long, confirm, then you buy. You get. That is it. So what I just did now is, this calculation is in cases where you get signal from somewhere else. But if you analyze yourself to get your distance, to get your SL percentage, you go to the chart, the position 2, you see it there. Alright guys, thanks for watching. Please don't forget to subscribe and like so this video can get to more people that needs it.
Once this video gets to 50 likes, I'll be dropping the next video. I look forward to taking you guys deeper and deeper into the world of trading and also technical analysis. Have a great day.